Here's the paradox that destroys nations. The greatest economic achievement a country can reach is also the beginning of its end. Every empire that has ever held the world's reserve currency has followed the same trajectory: rise through innovation and production, achieve currency dominance through economic strength, then systematically hollow out that very strength until nothing remains but debt and financial illusion. It's not a coincidence. It's not bad luck. It's a mathematical sequence as predictable as gravity. Let me show you how the crown of global currency becomes a noose. This is the story they don't teach in economics classes, because if they did, you'd see what's happening right now in real time. Amsterdam, 1609. The Dutch Republic is in its golden age, not metaphorically, literally. Dutch merchants control the spice trade. Dutch shipyards build the world's most advanced vessels. Dutch craftsmen create goods that command premium prices across Europe. The Dutch work, they produce, they innovate. The Amsterdam Exchange Bank opens its doors. For the first time in modern history, a nation creates a currency so trusted, so stable, so backed by real productive capacity that foreign merchants demand it. The Dutch guilder becomes the currency of international trade. Bills of exchange denominated in guilders flow across borders. Foreign nations hold guilder reserves. This is the moment, the achievement every nation dreams of. The Dutch have won the economic game. Their currency is the world's currency. They can now borrow in their own money. They can run trade deficits, and the world will happily hold their debt. They have achieved what economists call exorbitant privilege. Watch what happens next, because this is where the pattern starts to devour them. Within a generation, something subtle begins to shift in Amsterdam. A Dutch merchant can choose: invest in a risky shipbuilding venture that might yield 8% returns, or lend money to foreign governments at 6% guaranteed returns in gilt. The merchant chooses the loan. It's safer, it's easier. It leverages the one thing the Dutch now have that others don't: the world's reserve currency. This choice multiplies across thousands of merchants. Money that once built ships now finances foreign wars. Capital that once funded workshops now funds speculation. The Dutch economy begins a transformation it doesn't recognize as fatal. This is stage one of the pattern. Financialization, the shift from making things to financing things. By 1650, Amsterdam is the banking capital of the world, magnificent, wealthy beyond measure. The canals shimmer with the reflection of merchant palaces, but in the shipyards, activity is slowing. In the workshops, fewer apprentices train. The actual production, the foundation that made the guilder valuable in the first place, is quietly withering. Why build ships when you can lend money to Spain to build their ships? Why manufacture textiles when you can finance English textile mills? The returns are similar, but the effort is drastically different. Finance is clean. Finance is sophisticated. Finance is what advanced economies do. But here's what the Dutch don't see. Every guilder they lend abroad is a guilder not building Dutch productive capacity. Every foreign bond they buy is capital, not investing in Dutch innovation. They are trading their future production for present consumption. They are eating their seed corn while calling it a harvest. By 1700, the Dutch economy is unrecognizable, still wealthy, still sophisticated, but fundamentally hollow. They finance the world's trade. They insure the world's ships. They process the world's commodities through Amsterdam. But they no longer build the ships, no longer manufacture the goods, no longer lead in innovation. The Dutch have discovered the fatal paradox of reserve currency status. The very thing that makes you indispensable your currency slowly replaces the things that made your currency valuable in the first place. You become a financial intermediary in your own decline. This is stage 2, deindustrialization, the hollowing out of the productive base. When Britain rises with its textile mills and coal-powered factories, the Dutch cannot compete. Not because Dutch workers are less skilled, but because Dutch capital is deployed everywhere except in Dutch industry. The guilder is still used in international trade, Dutch banks are still powerful, but the economic substance has moved to Manchester and Birmingham. The reserve currency persists even as the underlying economy withers. This is the trap. The lag between losing productive dominance and losing currency dominance. The decades where you can still borrow cheaply, still run deficits, still maintain the illusion of power, while the foundation crumbles beneath you. But the pattern doesn't stop with the Dutch. Let me take you to London, Britain, 1815. Napoleon is defeated. The British Empire is ascendant. British factories produce half the world's manufactured goods. British coal powers the Industrial Revolution. British engineers lay railways across continents. The pound sterling, backed by this immense productive capacity, becomes the new reserve currency. Foreign central banks hold pounds. International trade invoices in pounds. British government bonds become the safe asset of the global financial system. Britain has achieved what the Dutch achieved, the crown of reserve currency. And Britain, like the Dutch before them, has no idea they've just signed their own death warrant. Watch the pattern play out again, because history doesn't repeat, but it rhymes with mathematical precision. By 1860, something is changing in London. The city London's financial district is booming. Foreign bonds, sovereign loans, colonial financing, insurance underwriting. British capital is flowing to Argentina, Australia, South Africa, India, anywhere except British factories. A British investor faces a choice. Invest in a new textile mill in Manchester with 7% returns, or lend to the Argentine government at 8% guaranteed in pounds. The investor chooses Argentina. This choice, multiplied across thousands of investors, becomes the pattern. By 1900, Britain holds over 40% of the world's foreign investment. Magnificent. The pound is unchallenged. London is the world's financial capital, but in Sheffield, steel production is being overtaken by Germany. In Birmingham, manufacturers are losing ground to American competition. In Manchester, the textile mills that sparked the Industrial Revolution are declining. The British have made the same fatal trade as the Dutch. They've exchanged production for finance. They've turned their reserve currency into a tool for funding others' development while their own industrial base atrophies. This is the third stage of the pattern, the deficit trap, where reserve currency status allows you to consume more than you produce, paid for by others holding your currency. Britain runs persistent trade deficits, not a crisis, because the world needs pounds. Foreign nations need pound reserves to trade with each other, so they happily buy British bonds, financing British consumption of German machinery and American wheat. The paradox deepens. Britain is wealthy. British citizens enjoy high living standards. The pound is the dominant currency, yet Britain is dying. The workshops and factories, the tangible base of economic power, are migrating to nations that haven't yet achieved reserve currency status. To nations still hungry, still building, still investing in production rather than financial engineering. By 1914, Britain still holds reserve currency status. But Germany outproduces Britain in steel. America outproduces Britain in virtually everything. The pound sterling is a lagging indicator. It reflects Britain's past dominance, not its present reality. When World War I erupts, the British learn a terrible truth. Financial dominance cannot forge steel. Currency reserves cannot build ships. Banking sophistication cannot manufacture shells. Britain survives the war only by liquidating those foreign investments, converting financial assets back into real production. The hollowness is exposed. Yet even after 1918, the pound persists as a reserve currency. For another 3 decades, through the 1920s, through the Great Depression, through World War II, the crown stays on the head of a dying empire. This is the cruelty of the pattern. The long, slow collapse where everyone can see the decline, except those experiencing it. By 1945, Britain is functionally bankrupt. The empire is dissolving. Industry is obsolete. But the pound is still a reserve currency, still used in international trade, still held by central banks. The form persists while the substance has vanished. This is stage 4, the zombie phase, where currency status outlives economic justification. The final transfer happens in 1956. Suez Britain tries to assert imperial power one last time. America says no, not through military force, but through financial force. The United States threatens to dump British bonds, to collapse the pound, unless Britain withdraws. Britain withdraws. In that moment, the world sees clearly what has been true for decades. The pound is a reserve currency only because the dollar allows it to be. Real economic power has moved across the Atlantic. The crown has passed, not suddenly, but through the same slow, predictable pattern. Now let me bring you to today, to the United States. To 2025. To the pattern playing out in real time on the world's largest economy. Bretton Woods. 1944. The dollar becomes the official global reserve currency, backed by gold. Backed by the fact that America produces 50% of global manufacturing output. Backed by real, tangible, overwhelming productive superiority. This is America's 1609, America's 1815, the moment of achievement, the poisoned crown. Watch what happens next, because you already know the pattern. By 1970, American capital is flowing overseas. Why build a factory in Detroit when you can earn returns financing Japanese development? Why invest in manufacturing when financial engineering offers better margins? Wall Street grows. Manufacturing shrinks. Nixon closes the gold window in 1971. The dollar becomes pure fiat, but it's still the reserve currency. Because the world needs dollars for oil, for trade, for reserves. The substance of American production is separating from the form of dollar dominance. By 2000, America's economy is transforming. Finance, insurance, real estate dominate. Manufacturing has declined from 27% of GDP to 11%. The factories have moved to China, Vietnam, Mexico. But this is called progress. America is moving up the value chain, becoming a service economy, a knowledge economy. These are euphemisms for the Dutch in 1680, for the British in 1880, for the pattern repeating. Here's what should terrify you about 2025. America runs a trade deficit of nearly $900 billion per year. America imports almost everything it consumes. America's industrial base, measured by capacity to produce physical goods, has hollowed out to levels not seen since before World War II, yet the dollar is still the reserve currency. Foreign central banks hold $12 trillion in reserves. Global trade denominates in dollars. American government debt is still considered the safe asset. This is stage 5, the terminal phase, where the lag between economic reality and currency status reaches its maximum extension. Just like the Dutch in 1720 still had the guilder even as their economy faded. Just like Britain in 1940 still had the pound even as the empire crumbled. America in 2025 still has the dollar even as the productive foundation dissolves. But the pattern doesn't care about military power. It doesn't care about technology. It doesn't care about financial innovation. The pattern is driven by a simple mechanism. Reserve currency status allows you to consume without producing. It allows you to run deficits without reform. It allows you to finance present living standards by mortgaging future productive capacity. And just like the Dutch, just like the British, just like every empire before, America has made the same choice. Print dollars, run deficits, financialize offshore production. Borrow against reserve status. Look at the numbers. U.S. manufacturing employment, 12 million workers. U.S. financial services employment, 9 million workers. The ratio has inverted from a century ago. America employs nearly as many people shuffling money as making things. U.S. national debt, $35 trillion. But this isn't a crisis because the world still needs dollars. Foreign nations will still buy U.S. bonds. The reserve currency allows deficit spending without immediate consequences. The pattern's final cruelty. The ability to continue the mistake because the crown hides the decay. China now manufactures more than the United States, European Union, and Japan combined. Not by a little, by multiples. China produces 50% of the world's steel, 60% of its cement, dominates solar panels, batteries, electric vehicles, shipbuilding, but the dollar is still the reserve currency. Just like the pound was still a reserve currency when America outproduced Britain. The lag, the zombie phase, where monetary form outlives economic substance. Here's the question that should haunt you. When does the pattern complete? For the Dutch, it took a century from peak to displacement. For Britain, about the same. The pattern operates slowly. A generation of workers shifted from production to finance. A generation of investors choosing foreign bonds over domestic factories. A generation of politicians preferring easy credit to difficult reform. But here's what's different this time. Speed. The Dutch took 100 years to hollow out. Britain took 100 years to fade. America has compressed the same pattern into 50 years. The velocity is unprecedented. The lag between losing productive dominance and losing currency dominance may be shorter than historical precedent suggests, because information moves at digital speed now. Capital flows at electronic speed. The world can recognize economic reality faster than in 1700 or 1900. When foreign nations see that the emperor has no clothes, that the reserve currency is backed not by production but by monetary printing, the adjustment may be rapid. You're seeing the early signs. BRICS nations discussing alternatives to dollar trade, central banks diversifying reserves, China settling oil trades in yuan, gold accumulation by foreign governments. These are the tremors before the earthquake. The pattern has never been broken, not once. Every reserve currency in modern history has followed the same sequence. Achievement, financialization, deindustrialization, deficit trap, zombie phase, collapse. The economists will tell you America is different. They'll point to military power, to technological innovation, to the network effects of dollar dominance. They said the same thing about the guilder in 1650, about the pound in 1900. The pattern doesn't care about exmulism. The pattern is structural. The incentives created by reserve currency status: borrow cheaply, finance others' development, consume more than you produce, are toxic. They destroy the very foundation that justified currency dominance. Think about what reserve currency status really means. It means the world trusts your currency enough to hold it as savings. But why do they trust it? Because your economy is productive, stable, powerful, because your currency represents real value. But then reserve currency status allows you to create that currency without creating value, to run deficits without consequences, to borrow without reform. You are slowly destroying the trust that gave you reserve status in the first place. The snake eating its tail. The Dutch guilder survived 120 years as a reserve currency. The pound sterling survived 100 years. The dollar has been the primary reserve currency for 80 years. The pattern suggests the endgame is approaching. Let me be clear. This isn't about timing the collapse. This isn't about predicting next year or next decade. The pattern operates over generations. The zombie phase can last decades. Britain maintained reserve currency status for 40 years after losing economic dominance, but the pattern always completes. The currency always follows the economy. When your economy hollows out, when production moves elsewhere, when you become a financial intermediary rather than a producer, the currency eventually reflects that reality. You cannot maintain reserve currency status purely through military power or past reputation, because currency is a claim on goods. When you cannot produce goods, when you must import everything, when your economy is structured around finance rather than production, those claims become suspect. The moment of recognition comes suddenly, even though the decline was slow. For the Dutch, it was the rise of British power. For Britain, it was Suez. For America, it will be some crisis where dollar dominance is tested and found hollow. Maybe it's a war where American industrial capacity cannot scale to demand. Maybe it's a debt crisis where foreign nations refuse to buy more bonds. Maybe it's simply the slow accumulation of alternatives until the dollar's network effect breaks. But the pattern says it's coming. Not because of any specific policy, not because of any particular administration, but because the structural incentives of reserve currency status are toxic. They seduce nations into choosing finance over production, credit over industry, present consumption over future capacity. And once you make that choice, once you financialize and deindustrialize and deficit spend your way through decades, you cannot easily reverse it. The factories are gone. The workers are retrained. The capital allocation patterns are set. The political economy is structured around cheap credit. You are the Dutch in 1700, watching British power rise, still believing the guilder's status is eternal. You are the British in 1930, still holding the pound as a reserve currency, while America builds the industrial base that will dominate the century. You are living through the pattern's final act, the zombie phase where the currency's status persists despite economic reality, the calm before the recognition. Every empire that achieved reserve currency status believed it was different, believed its power was permanent, believed the pattern wouldn't apply to them. They were all wrong. The Dutch financiers in their Amsterdam palaces couldn't imagine a future without guilder dominance. The British bankers in their London offices couldn't conceive of a world without sterling. American policymakers today cannot envision a post-dollar system, but the pattern cares nothing for imagination. It is driven by mathematics, by incentives, by the structural forces that turn the crown of reserve currency into the noose of national decline. You are watching it happen. The trade deficits, the financialization, the debt accumulation, the zombie phase where form persists while substance decays. The question isn't whether the pattern will complete. History has answered that. The question is what comes after. What happens when the world's reserve currency, the foundation of the global financial system, follows the guilder and the pound into history? What happens when there is no obvious successor? When the yuan is constrained by capital controls? When the euro is fragmented by political division? When no single currency has the productive base and stability to replace the dollar? Maybe we're heading not for a new reserve currency, but for a world with none. A world where the very concept of a dominant global currency dies with the dollar. That would be truly unprecedented. Not the death of a reserve currency. That's happened before. But the death of the pattern itself. The end of the system where one nation's currency dominates global trade. The Dutch passed the crown to the British passed it to America. But maybe America has no one to pass it to. Maybe the pattern completes in fragmentation rather than transfer. Either way, you are living through the end of something. The final chapters of dollar dominance. The last act of a play that has been running since 1944, since 1815, since 1609. The empires don't see their own decline. They are too close to it, too invested in the illusion, too dependent on the system that is failing them. But the pattern is visible to anyone who studies history, to anyone who sees past the immediate to the structural, to anyone who understands that economics is driven not by hope or power projection, but by mathematics. The reserve currency trap has never been escaped. The pattern has never been broken, and it won't be broken now. The only question is whether you see it, and what you do with that knowledge. Because when the recognition comes, when the dollar's status is finally questioned by enough of the world, the adjustment will not be gradual. It will be sudden, brutal, systemic. The Dutch learned, the British learned. America's turn is coming. The pattern always wins.